Satrix RAFI 40, goodness me. Talk about acronyms. Nerina, you're steeped in these acronyms. I think I'm just going to stop right there and hand it over to you.
The RAFI part stands for Research Associates. I at least know that. And that is a US-based organization that, again, had a slightly different formula, but I think we're going to see something similar here to what we saw with the Givi one.
So close. It's research affiliates, actually. Fundamental indexation. So that's what the RAFI acronym stands for. And yes, there is it shares some of the characteristics of the Givi methodology, but I think the big difference with the RAFI methodology is that it looks backward. It looks at 5 years of fundamental data, whereas the Givi was much more forward-looking. So what's the intrinsic value on a forward-looking basis?
It's almost backcasting.
It is backcasting to some extent, but it really looks at the longer term, if you can call 5 years long term, but longer term sort of fundamental picture for the companies, the sectors, the industries. Because the important thing about the Satrix RAFI, when we look at this, even though it currently has a relatively high exposure to resources companies, about double what you would find in the all-share or the SWIX, it's not only resources or commodities. And that's why I wanted to bring this in here also, because it's not just a pure resources investment that you would be looking at, but it is focusing on a value style of investing. So fundamental indexation really looks at the 4 major sort of fundamental categories. So whether it's earnings, revenue, dividends, balance sheet, those sort of things. And on the basis of that, selects the 40 companies that represent the best value in terms of it. So I haven't been hot on the RAFI methodology for quite a while, partly because I don't think value has really been something that has been working and has been worthwhile to look at. But where we stand now, I think we might find a different picture, and that's why I brought this one up, because I thought it actually presents some interesting opportunities.
Can we have a look at this one, Paul? You can talk us through what is
the share chart
there.
should come up with the process while we talk, but what's interesting for me though, Nerina, is that if I look, and I think it's the December fact sheet for the Satrix RAFI 40, it still had a very high allocation to, in particular, Anglo Gold Ashanti.
Yes.
Goldfields, and then a significant exposure to both of the Mondi MNDs and MNPs.
Yeah. So very similar to the Givi then.
Somebody was liking the particular mix, as you say, of a low price earnings ratio relative to historic earnings, and just sensing that maybe the opportunity to strike was there. But where's that going to come from?
Well, the interesting thing is it also has Billiton and Sasol in it. So this is not just the paper and the gold.
Is this not the combination that you were talking about,
exactly.
the other two, where you wanted to combine them?
Absolutely. And then it goes further that it also incorporates quite a bit of financial and industrial shares as well. So
but
it really is a broad-based one.
It's supposed to be the RAFI 40, but would that get excluded because it's too high? It's got a ludicrous price earnings ratio. So it's in there. The dividend yield is poor.
The Naspers is in.
It's in there, but it's sitting at like 2%, 2.3% weight in that index. Exactly. So I think what you're seeing with the RAFI, still most of the same stocks as the regular top 40 gets included. Slight differences, but most of them are there. But it's the relative weighting that's quite different, and the weighting is tilted towards what the methodology suggests represent value.
But that methodology would be a value-oriented sort of lens. So do you think the moment has come where finally, value stocks are going to have their day, and all of the go-go nonsense and all of that froth's going to get blown off? Then this would be the one.
So this is time. The time is hot now.
Well, I think what's interesting for me about this one is it's got about double the exposure to resources, about half the exposure to industrial stocks, and it's in the industrial sector that we often complain for being overvalued. So it's true to what it intends to do. And for me, I'm hot on this one because I do think it gives you a very nicely interesting diversified exposure to the top 40 stocks on the JSE, and weighted differently than the size bias that our normal market cap weighted ETFs give.
I like this one, Paul. You've got
doesn't have enough Naspers for me. What can I say? No,
anything that doesn't have enough Naspers is out in his
And it has resources, let's not forget,
Yes, of course.